Good morning, everybody. They brought in the big dogs. We're going to get Powell today. He wasn't scheduled very long ago. He's a new addition to the schedule. Found a headline that he's supposed to square this strong economy with the potential for a rate cut. Him and Jefferson? Yeah. Almost like a Fed Fireside chat, which is what I named today's morning briefing. You older people probably recognize that from when like old presidents would do the fireside chat. The headline that I found on Reuters was Fed's Powell and Jefferson to square restrictive policy with strong data. We'll see. We'll see. The plunge protection team is a real deal, and it can work both ways. If the market is getting too excited, they can come in and whack it down. And if the market is getting too negative, they can go in and lift it up. All it takes is for them to talk. They don't have to buy anything. They don't even really have to do anything. Just talk. All right. I think we're all on it now. Morning, good morning. So I mentioned this is from Reuters. It's just a few hours old. Well, updated an hour ago. It was wrote actually like 10 hours ago, but they added an update to it. If you're new to doing research and things like that, make sure articles that you are reading come from a reputable source and that they are dated so that you know what the time frame is. That might sound like a Captain Obvious statement, but somebody the other day sent me a news article that the thing was 2 years old. That's a bit out of date. Had no relevance on what we were doing whatsoever. So Japan getting hit even harder. This has been a theme that we've continued to see now. All of April has just been a beatdown, almost to the day where Bloomberg had announced that Buffett was buying up a bunch of bonds in Japan. And from that point forward, this thing has been down. I think this is the first morning we've seen it down 4%, but it's been down on average 2%. And, some mornings 1.5. We could be seeing a capitulation low here, right? Where it gets one more leg down and then it flips the script and runs back the other direction. The Dow is up this morning the most at 0.60%. Everything else is basically flat. Small caps is down 0.5% in the red. And then we're just spread out. So it's a mixed bag all over the place. We have multiple Fed speakers today, Jefferson and Powell. We're going to get a little bit of housing data, some production numbers. I couldn't get FX Street to load this morning. Their app was working just fine if you have it on a tablet or a phone, and no problems there, but the website was down. Don't know what's up with that. I tend not to run in circles. If it isn't working, it isn't working. It'll be all right. So check back on it on your own later on through the day and see if it pulls up. Remember, the FX Street's going to be where you see Canada, Europe, Japan. You know, we're looking here at the US economic calendar on Market Watch, and it does a really good job of highlighting the biggest things, but it doesn't get everything. It doesn't even try to get everything. It only wants the biggest things, and it's only for the US. And we all know that Canada early in the morning and Europe all the way up until 11 today can really shake our market around. So you want to know when we're going to get economic data out from other nations. And FX Street does a really good job with that, and it's free. Usually there's no issue, but something's up this morning. But as you can see, we've got Christine Lagarde, which is out of European Central Bank. And then US, we got the Fed. We've got nonstop all day today. There's something going on. So, you know, level by level. And it's really interesting what we're going to see out of Powell. We are done with the banks this morning. All of that still needs to be tied up and measured by the quants. Remember, the banks generally set the tone for the rest of the earnings season, and how the banks are doing, what they say collectively about how the outlook is going forward is worth the effort of tying all those numbers together. So we'll probably get that data next week, maybe over the weekend. Eight 15, 8:30, 9:15, 11, 11:30. There's probably an auction at 1 o'clock. We're just not seeing it. And then Powell at 1:15. We do have auctions today, both really close to the front, 4-week auction, and then a 52-week auction a little farther out, right? So 1 year. Still pretty close to the front, though. All right, we do not have hedging this morning. We don't see a market maker move up here. The volumes are solid. They're in here trading. In fact, the volumes are almost at a level where we would start to be a little concerned. You can see the tag that I have here showing elevated volumes. There's no wrong number, right? When I started using this indicator years ago, there wasn't a book or anything like that to go with it. I was just trying to get a feel for the overnight volume. So I started watching it on a day-to-day basis and began to get a feel for what normal looked like. Think about what you trade: NASDAQ, ES, gold, oil, whatever. Can you say what normal is? Do you know when the volume in that particular instrument is heavy or light? It's not something you're necessarily going to see in the candles, especially if you're using time-based candles like a 15-minute, a 5-minute, 1 minute, whatever, time-based. So whatever it is that you trade, you kind of want to get a feel for the volume, and that's what this is. It's just cumulative volume. So when the volume comes in, it's adding it up. Positive or negative, it doesn't matter. It's just adding it up. What's the total cumulative volume? I got a line in the sand at 7:30 giving me an idea of what the cumulative overnight volume was. And after using this thing day after day, quarter after quarter, year after year, you kind of get a feel for what normal looks like, right? So 170, 130s, 100, those are some pretty big numbers. And we've seen them for the last 4 days, well above 100. And I mean, now we're higher than even Friday and Monday, nearly at 180. It's impressive. So a lot of trading going on. There is OPEX at the end of the week. That's not what's affecting this, but It's always worth noting what's going on this week that makes volume different. While OPEX isn't messing with this volume, it is something different this week as opposed to, just any other normal week. So heavy volume, no market maker move shows that they're not hedging this stuff. They're just straight up trading it. We had a very narrow IB last night. IB is initial balance. Think of it very much like an open range. The difference between IB and open range is, as a strategy, you can use whatever time frame you want for your open range. 5 minute, 1 minute, 15 minute, 1 hour, 1 day, 3 days. When it comes to IB initial balance, it's always 1 hour. You don't get to choose. Now, you can use a Globex open range, starting with a 5 minute, 1 minute, whatever you want. But it would be, again, an open range. It wouldn't be an IB. Now, if you go searching for initial balance, you want to learn more about it, there is a modern version of IB. I've seen some educators trying to promote the idea that IB starts at 9:30 instead of in Globex at 6 o'clock the night before. I'm not a big fan of that concept. It seems like they're just screwing everything up and twisting everything around, but whatever. It doesn't really matter what we call it, right? So whether you call it IB or not, the first hour of trading between 6 and 7 last night sets the range that we want to focus on. It's a very narrow zone that we're focused on right here, and we haven't really done much with it one way or the other. This implies that they still have a lot of fuel left in the tank. They still have a lot of trading that needs to be done today. It's the easiest way to just simplify everything. Approach it from the idea that they've got tens of thousands of contracts that they need to get traded. This narrow range implies they didn't get that work done, and that they could still come in at any time and begin getting that work done, hunting for liquidity, moving with price, actively participating on the dome to get those contracts filled. Whereas right now, they haven't done that. If you were to come in and you had a very wide IB, wide initial balance, then that would imply that they already did get that work done. And then, you got to kind of ask at that point, if they're already done for the day, why would I expect them to come in and trade more? We're underneath the daily pivot point. So this is an MDP. It's a missed daily pivot. We haven't hit it. It won't count for today. It will count for tomorrow. Missed daily pivots are something as a look back feature. We look back at the end of the day and say, did we avoid hitting that daily pivot? Price tends to hit the pivot 80% of the time or more. So if it's a day where we didn't hit the pivot, we're doing something unusual. We're in the 20th percentile, right? We're in that small window where price is doing something different. There's more to the story than that. It's not my strategy. I don't even trade it as a strategy. I use it for analysis. It's not mine. If you want to know more about it, you can certainly just hit YouTube and type in missed daily pivots. You'll find it. If we're to make a move to the upside, we would have to get through the lower ADR at the cog line 51.31. Then the 10-week moving average, which is right next to the daily pivot point. We'd have a volatility trigger getting through the previous week's low, because we are inside week breakout right now. We have broke out of last week's range. Then we would have to get through the 3-week moving average, the upper ADR at 51.60, last week's close, a voodoo line, the 10-day moving average, the weekly pivot point, and then the 20-day moving average. All of that is over our head. Now, we can cut through that, especially on news, or, if Powell comes out chipping his teeth and really changes the tone of the market. But without some kind of economic agenda, without some sort of news or catalyst to propel us through there, it's going to be a long, slow fight to work our way back through all of that resistance, if we're even able to do that. Because whatever put us down this far already, it's not done yet. So kind of have to approach it with the idea of why would we start to go back up unless something changes within the market. If you look here on the right side, this is a weekly chart, and down on the lower portion here is a CVI indicator. It's a cumulative volume index, and I have it set to the NASDAQ. On Thinkorswim, I can't choose just all US markets. I have to pick one, and the S&P isn't one of them. If you're on TradingView, they also have an indicator called CVI, and it's kind of better than the one on Thinkorswim because it lets you lump all of the US markets into one, so that you're not just picking whether you want to see the NASDAQ, the Dow, or the S&P. It's kind of nice. But I can code Thinkorswim. I can't really code TradingView all that well. And I added Bollinger's to this, my moving averages to it. And we can see that it broke the lower Bollinger Band. This is like net volume. So net selling put us in this position. Net buying would have been the move here where we were breaking out to the upside. There's more selling than buying at this point. We came out of a narrow range. It's not quite a squeeze. We would have to add, like the Keltner channel to this to see if it was technically a squeeze, but that's close enough in my book. The narrowing of the bands like that, and then now it's starting to curl back out. Remember, it takes a while to move the Bollingers to stretch them out. So this CVI push to the downside, it's going to push the bands out a little bit, and then we would expect it to pull back up, but the bands will continue to be stretched. Then it might take another shot to the downside. We just don't know yet. Net volume, though, is right now net selling volume. I mentioned we were inside week breakout. This is a weekly chart. You can see that we broke outside of last week's range. We're underneath the 10-week moving average. We're still holding above the 20-week moving average. One of the things that we can do on this weekly time frame is measure last week's candle. Let's use a different one. So when we measure last week's candle, you can see that we moved 50%. And that was where we turned around. It's not magic, right? It's just math. I love math. So now we have to resolve this issue. Either come back down, break that low at 50.82 and continue down to the next pivot, which is just above the 20-week, or get back inside the box. The low of last week was 51.50. That's an options level. If you keep track of the spot gamma material that I post, it's been a put wall for a while, but that put wall has been rolled out. It's now at 50.41. Not quite splitting the difference between these two. That put wall is going to be down in there somewhere. So it's still above the 20-week and not quite in the middle of the next measured move. Remember, a put wall is going to be where we would expect them to come in and defend. So I don't necessarily want to call it support. It gives the wrong impression, but we would expect to see them monetize the puts and try to defend that low and stop price from going lower. At the very least, it's often where we get a bounce. We expect price to not fall in a straight line or even move in a straight line, right? We come down and bounce. Even if we were going to continue lower, we would still expect the bounce first. It's where they'll monetize. We're not there yet. We still need to break this low before any of that happens. We built a nice base in the overnight. Take everything off and just look at what we have on price here. We've got a nice base built. So now that we've built this base, one thing that we can't have is going lower than the low that we've already set. And for a good base to be effective, we don't want to come back inside that base. We're already above the cog line 5111. That needs to hold. If it doesn't hold, it's not the end of everything, but we definitely don't want to see price come back inside this box. Now that we've built a base and we've come out of that base, it needs to hold. So getting back in this box calls into question the fact that this was a base at all and might instead be viewed upon as just a pause and a lift up for some momentum. Think about a sticky door that you're trying to walk through and it didn't want to open. So what do, right? Back up, lower your shoulder and put a little effort into it. Price hits resistance and it doesn't make it through. A lot of times we see price just back up and get a running start. Try it again, break through it. So if it comes back inside the box, the target is the bottom of the box. If we break through that, the target is the next measured move lower. $50.15, which is close enough to 50.11 cog line or the 20-week moving average. Take your pick, any or. We are entirely underneath the 50-day moving average. We haven't been down there since QRA in November. Once we got above it, that's been it. We've been holding above it really well. At some point, if we get too close to the 50 or the 200, then we're going to go to it like a magnet. But at this point, we're still a long ways from it. There's also year-to-date VWAP, which we'll get to in a little bit. But the anchor on that VWAP being the first of the year when we got above it, and I called it, we'd probably stay above it for a while. It's been a couple months, but that's also now in focus on whether or not we're actually going to touch that VWAP, let alone get through it. $10-day, 30-minute volume profile. We started to develop a little bit of a P shape yesterday, but look at the amount of volume that came in down here in this low zone. And we haven't really spent that much time here. They're certainly out of sync. We do have the shallow area on each side showing that price cut through that zone really quick. Generally speaking, it can cut back through it the other way also really quick. We can see these shallow zones where price cut through it really easy. Didn't really leave much of a footprint behind. Shallow zone. And this zone isn't as shallow as it used to be just because we keep cutting through it, leaving a little bit of crumbs behind, but price continues to flip through that area relatively easy. And so far right now, this is the new spot where price is cutting through relatively easy. So 5160 is an area where we'll start to pick back up some of that resistance in volume. And back below, call it 5115. All the way underneath 5100 and a little below that. Spot Gamma had some really good write-up on this yesterday, talking about how there wasn't much left down here and that we needed to see them roll the puts down or maybe even build out more puts at a lower level. And I'm still waiting on the AM edition to see what they have to say. They haven't published it yet. When they do, I'll kick it over to you guys and let you see what they have to say. The trend, obviously, if you haven't caught on yet, is down. We're not out of it yet. We're in no way looking at an uptrend yet. We don't even have a confirmed base yet. Remember, using pure price analysis, if we're going to consider this a reversal and a move to the upside, we've got a higher low, and right now we've got our first high. But we would need to pull back and set yet another higher low and then another higher high so that we have a full set. And a full set is 2 higher highs, 2 higher lows. Until we have at least a full set, then this isn't a trend change. It's not even a confirmed basing pattern yet. All right, so we carried forward Friday's point of control, and I thought it did a really good job yesterday of offering an opportunity to trade. This is what it looked like when price came down and hit it. So we marked it out yesterday. Price fell hard right into Friday's volume, and traders stepped in. It wasn't as big as I would have expected it to be, the amount of flows that came through, but it was where the greatest amount of trading had taken place on Friday. And it was not a disappointment to see that there we were on Monday, right back to the same level that we were on Friday. And traders didn't like it. They came in and traded a little bit of it. It didn't hold for any sort of support. We ended up breaking through it. We're done with it now. We don't have a VPOC for today because we've already crossed through yesterday's point of control. We cut through it at 7 o'clock this morning, so it's not a VPOC. But if you're studying volume profile, what they're going to teach you is to mark the value area high, carry it across, and the value area low, carry it across, and the point of control. Whether or not it's a VPOC or not, it's still a point of control. I've got enough pivots, so I'm not carrying it forward. I only carry forward the ones that have not been hit, like the one overhead and some of these that are still below us. So I don't need it. I've already got enough. But if you don't have enough pivots and you want another one, those are good ones to carry forward. It's a lot of history and background into bringing over the volume profile pivot points. You can really see, though, on this 5-minute chart, this narrow representation of just how tight everything was last night. And look at the amount of volume that we're getting this morning at this level. We haven't spent very much time here. We can see in blue, the TPO, very little time has been spent up here because we just ran up, right? We just got here. And yet we're seeing some, I don't know, it's not massive amounts of volume, but it's certainly a significant amount. If we were on the monkey bars or a footprint chart, whatever you want to call it, depending on your platform, Thinkorswim calls them monkey bars, then we could represent these blocks of volume better, but sorry, it doesn't matter. All right, I mentioned the anchored VWAP. We're there. We got into it yesterday. We also got into the weekly expected move. So let's start with the weekly expected move. This is the range that price was expected to move for the entire week. So on Friday, price closed here. The lines were set, the high side and the low side. And we expected price to stay within this range, but that it could move as high as the green or as low as the red by throughout the week, at some point through the week. We made the entire trip nearly in one day, finished it off this morning before rebounding and going in the other direction. It's not unusual. It happens more often than you would think. I used to run a strategy that focused on going the other direction. If we got to the upper edge by Monday or Tuesday, then I would go short. If we got to the lower edge by Monday or Tuesday, I would go long. I would do that in options, usually at SPY. You can do it in SPX too. It's just more risk, right? But certainly can do it. The idea though is that while this line in the sand says, I don't think you're going to close below that line by the end of the week, it doesn't necessarily say, I think you're going to go to the other side. So buying a call, I mean, if it's a really cheap, out of the money lottery ticket call, a couple pennies, sure, why not? Honestly, like, why not? It's no different than a scratch lottery ticket. It's $2. So what? But if trying to buy the call on the other side of the line, is 800, 1,000, that's an expensive lottery ticket. That's not a lottery ticket, right? That's just a lot of risk, because there's nothing that says momentum or trend or movement to the other side, just that we don't think we're going to close lower than this line by the end of the week. So you'd be better off with a put credit spread or a far out of the money call debit spread, something really cheap that if you're wrong, it doesn't hurt, right? This cyan line here is the year-to-date anchored VWAP. Generally speaking, when we're above it, then price is above its average, and when we're below it, price is below its average. This is the average for the year, because we're starting it right at the first of the year. Markets generally don't behave well if it cuts below that point. Now, Brian Shannon is like the guy when it comes to anchored VWAP, backtesting, research, studies, education, concepts, logic, and examples. It's his niche, right? That's just what he's been doing for like 25 years. And I just don't have the forum to go into all the parts and pieces and nuances of this. But when it comes to an anchored VWAP, you can anchor it wherever you want, even last year's, and then look at what price did. And not just on the ES, but whatever you like to trade, right? Say you're not a futures trader and you just, want to focus on equities. Put the anchor to VWAP on, whether it's a monthly anchor, daily anchor, last gap, biggest volume spot, first of the year, first of the month. There's so many places to anchor. Anchor, go back, look at it, research it, develop a better understanding of how price behaves around it. We need to hold above it. It's kind of the big deal here. So we got through it back here. I called it once we got through it that we were probably going to keep above it for a while. Well, I mean, it's been a while. I really expected to get into QRA before we had this issue. QRA is going to be May 1st, along with FOMC. So we'll see. As for the 10-week, well, let's just start with the 10-day, 1.5% below the 10-day. This is the most extreme we've been since QRA, basically. Way back here at the end of October, 1st of November, when we had QRA back here. It hasn't been that negative since then. So this is the most it's been negative this year, and the most it's been negative since the QRA event. We're not necessarily oversold yet. We can see plenty of examples where we've been more negative, farther below the 10 than this. But if you look on average at where we're at right now, well, where we were at yesterday, it's right around the time that we've started to turn around and go back, not counting the whole bear market thing in 2022, but in 2023, right, we tried turning things around and working our way back up now into 2024. This is about where the flip point is. So unless we go into a confirmed bear market, which this is not even close to a confirmed bear market, then we're right about at an oversold level, and we're already seeing price move away from that point. I don't like the phrase overbought and oversold. It gives new traders some suspicions or inclinations that price is supposed to go the other direction. And I think the wording is just misleading. On the 10-week, we're about 0.5% below the 10-week. This is the first time we've been underneath the 10-week this year. And since QRA, same thing that we were just talking about, but on the weekly. We're not oversold, not even close. We haven't even gotten started. Think of the basketball court. Where the game begins, it's in the middle of the court. From the middle, you've got an equal chance of going to either side. It's an equal distance to each goal. We're at the 0 line. We're back at the center of the basketball court. So the game's been dominated on one side of the court for a long time. Now we're back to the middle. We'll see where we go from here. But at this point, we're not oversold, not even close. We're just getting started. Looking at things that are down this morning, China's down more than 5% with the Hang Seng. Gold miners, emerging markets, which is China again. KWEB, it's China again. Bitcoin down more than 8%. That's a kick in the face. Halving is coming up really close. And if you haven't looked into this yet, Bitcoin cuts in half. It's not new. This happens periodically to supply and demand, basically, right? To limit how much is out there. Historically, after halving, I need a better word for that. After cutting that sucker in half, it tends to do really good. That's something to think about. Seasonality when it comes to trading has always been a little wonky, right? I mean, it's hard to trust cycles, but you're going to want to dig deeper into this, even if you don't trade, like Doge and Bitcoin and Litecoin, that kind of stuff. You don't have to, not nowadays. There's ETFs that you can trade, like BITO, GBTC. There's so many, right? With all the approvals that came through, now all the major firms, Fidelity, Schwab, BlackRock, they all have an ETF that you can trade that gives you exposure to Bitcoin. Plus, there's the companies, Mara, Hut, Hive, Hood, Coin, Riot. So many ways to get exposure to this space. The negativity is going to persist very likely until that halving event. And then we'll see. And if you haven't heard anything about this, check it out. It might be something worth playing when everything else is looking pretty nasty. Energy's down, oil and gas, bonds, uranium. It would almost be easier, to just say, well, what's up? What's that? Healthcare is up. That's it. That's what we got. Healthcare. Yeah, that's a short list. Now, the benchmark cutoff point generally is at 0.5%. What you're going to want to watch is this column right here during the stream. That's the cutoff point. So really, Bitcoin and the China ADRs is the line in the sand. And I've been talking about change over 5 days. But for this morning, still all of those are down. Gold miners, China ADRs, Bitcoin. Bonds aren't down enough. Energy exploration, metals and mining, they're not down enough. What I don't see in that group is the FANGs. So they're all the way down here, barely up, basically flat, but they are up just barely, slightly, which means they're not doing anything. Google and Amazon were the two that were continuing to perform well. Well, three if you count Meta. But as you can see with Google, significant breakdown day all the way to the 10 in a single shot. So inside day breakout, we're down to the 10. We can see this morning that it's really still not doing anything. It broke a little lower and now is basically back to where it closed. Pretty close, or is trying to hold. If it was going to rally today, we would want to mark out the half back to see Google get above that at least as a good starting point. And then, of course, run up, break out of yesterday's high, continue the move to the upside. But we don't have any of that yet, right? And looking at Google, that was blue skies last week, all new highs, everything, the works. We had red to green yesterday, so it closed lows, closed red on Friday, opened, gapped up almost to the 50% mark. Above it, wasn't able to keep it. If you were looking for a tradable setup yesterday, that would have been a really good tradable setup. Red to green that opened above the halfback, tried to run, tried to rally, and then failed. As a day trade, that's a reasonably decent setup. If we continue to move to the downside this morning in Google, then the 20 period daily moving average is the target 152.5. Below that, like 152.5, maybe overshoot to 152. If we measure this last run and now the pullback, you can see we're underneath 155, basically. It's what we're fighting against this morning. So it's going to be the line in the sand. If we do get above it and then break back down below it, like yesterday, then we're definitely going to run that 150. Amazon is one of the other fangs, this one and Meta, that had been looking pretty good. And honestly, Amazon looked better than Google. But one day, all the way back to the 10, closed below it. It's fighting this morning, trying to get back up, but this is a heck of a fight. And so far, it's not performing very well. We can do the same measure. So we got this 186. We can also mark out yesterday's levels. The halfback 185.85. We're nowhere near any of that. And we have to get back through that 10-day moving average. So a lot of fight for Amazon to get back to where it was. And keep in mind, this was blue skies, right? This is all-time highs, blue skies, clear sailing, and then the smackdown. Now, it's just a pullback at this point. None of these are broken trend or anything like that. But if we break this 183, then we'll target the 20-day moving average. Could overshoot it into 181-ish. Not looking for a really big breakdown yet. And Meta was the other one. It doesn't look as good as the others, but after that earnings, and actually, since back here, the end of October, then we got QRA and the indexes, and this thing's just been a champ. But after blue skies on the 4th or the 5th, somewhere right around in there, we've just been fading back. big breakdown yesterday. Really clean. Now we've got to work through all of that, just like with the rest of those. We're under the 10 and the 20. So on this one, we're focused on the 50. Depending on if you're using the 50 EMA or the 50 SMA, then you're looking at 490 or 480. 490 is a halfback for one of these bigger levels. From this last gap up. So it lines up with the moving average and it lines up with the halfback. You know, we expect price to bounce, even if it's going to continue to go lower. Bounce on support, rally into resistance, roll over, break that support, continue lower. That's the theme, right? It's just what it does. So that would be the where we'd expect to bounce. Right now, that would be the target, 490. And if we don't have the fangs, right? If we don't have Apple, Amazon, Google, Microsoft, if they're not buying that, why would they buy anything else? If they're not willing to hold that, why would they hold anything else? So we do got Apple here. Apple was trying to turn things around. It's been one of the beat down, forgotten, left behind. But we've got a downward sloping 200 period moving average, and we rejected off of it soundly. This morning broke down even lower, although it did try to recover a little bit. We've got a candle of control, so we want to focus on that. We've also got this run, and then we've got yesterday's price. None of these moving averages matter for us right now, except for maybe the 200 period, getting above it and staying above it. But for the 50, the 20, the 10, they're worthless. We've cut through them so many times. They have no value, no respect. Just completely ignore them at this point. Apple's got a lot of work to do to turn things around and begin going back up. This pullback isn't the end of the world yet, but the halfback here kind of lines up with the 1020, and you know, we need to keep that halfback. If we do break the halfback, we'll retest this low. So target would be back down into that 168, 167 area. Microsoft in one shot took it all the way down to the 50. It's a really, really big bar. It was red to green, which is fantastic to get a red to green that's completely inside day breakout like that. But it just completely collapsed yesterday. If we get on the other side of this 50, then we'll target $400. That sounds like a lot, but you know, considering we went from call it 425 to 415, just for some easy numbers, we moved $10 yesterday. Going another $14 isn't a big deal, especially by the end of the week. We're still in trend, though, on this for the moment. It's just a really big outsized bar. I didn't see semis when we were looking at the names here in Market Watch. So just really quick. The fangs we already knew were slightly up, but SMH can give us an idea what's going on. It's also slightly up. So start with semiconductors, just like when we started with the fangs. For NVIDIA, having that move to the downside yesterday, like everything else, we can see this morning it's already starting to recover, just like everything else is trying to recover. We can lay out the same thing that we did on the others. So mark yesterday's high and yesterday's low. Breaking back down below yesterday's low will give us a target for 828. We are tangled up in the 10 and the 20, but they have no value at this point. They're not support or resistance. They're not even worth really mentioning, since they have no respect at this point. Price has cut through them so much. There's just no respect there anymore. For NVIDIA to continue to move to the upside, it has to get through all of this trash. And even if we were to use something like an OCR style analysis, we don't have anything here. We have no uptrend at this point. 2 up days put us right into this group. We can even encompass all of these where they were defending on that high side. This is the range. And we don't know if these sellers are done yet. So far, we don't have any evidence that they're done. It's very likely that we'll get back into this zone and get sold again. Anything above 900 seems to be getting sold, and we haven't made it to 930 even once. If we're going to get a resumption in NVIDIA back to some highs, then we've got to get through that 920 area. So far, we're not able to do that. It would form this really nice cup, right? We had the pullback. We're building a decent base. So we could build this base, come out on the other side, we'd have a really good cup. IBD puts time frames on their daily cups and weekly cups. And having a base that lasts for a while, building some structure here, it's correcting in time really more than correcting in price. They don't say that, but that's the logic behind it. Building a base and then coming up the other side would give us a really strong breakout structure, like a foundation to move higher from, right? Which could get us into the thousands and up from there. But we don't have that yet. So far, we've got a solid low that is holding for now, and it needs to continue to hold for this base conversation to be effective. We start breaking this low and expanding lower, there is no base. There's just the 50, and then we'll cut that and we'll start focusing on splitting the difference between the 50 and the 200. That's NVIDIA. AMD is looking a lot worse. No base. And even if we were to back up and look at the base it was building, well, it broke it. So big bearish outside bar. And then we built another base, or tried to, down here. This is a really nice IX10 pattern. Very tight consolidation. Break to the downside with expansion. So with force or with energy. That's a nice example of an IX10. Really narrow, tight range. And now we're out of it. So for AMD, which in the pre-market, it's doing better than a lot of the other things out there. We'd have to get through the half back of yesterday and then get completely outside of yesterday to the upside, right? Got to have a full inside day breakout above 165, and then we'll focus on getting this gap closed. Remember, the gap isn't closed until price comes back to where it closed on that day, 411. 170.5 will close the gap. Well, that's $5 higher than the breakout point. 165 to 170. That would also keep us right underneath all of these major moving averages. And it doesn't look good that the 10 and the 20 have crossed through the 50. So AMD is damaged considerably. SMCI holding that 50, but just barely. Don't have a 10-20 cross, the 10 or the 20 crossing the 50 yet, but that would be the next thing. Notice that this double bottom doesn't have matching lows. They were front running the low. That's not necessarily a good thing, but it's not your classic double bottom where it went lower than the previous low. It's more of a cup and handle, upside down cup and handle. And that bodes for a resumption to the downside with measured moves like that. 730. If we can break this half back at 980, then we can try 1100. But there's a lot of resistance overhead, just from previous price action, not on, can't see that resistance here, but if I were to put it over into my profile, then you would see it better. 10-day, 30-minute should light it up pretty good, show you all that resistance overhead. No amount of technical analysis is going to prepare you for how the market will respond to Powell today. So keep that in mind. Everything that we've talked about was just price. Powell's influence is going to come from his own agenda, whatever he's trying to do to the market. And I don't see him coming in trying to tiptoe, right? Like a lot of times the Fed just doesn't want to shake the market. We all know the market doesn't like surprises, and the Fed tries to telegraph as much as they can any new information before they present the new information. But this is an extra Powell event that wasn't there. He's coming out to get something done. And, well, we don't know what his agenda is. So he could send the market on a tailspin. If you haven't heard of it, there's a thing called Jackson Hole. It's in Wyoming. Every year there's a big event up there in Jackson Hole, and Powell usually gives a conference. So in 2022, the market was running to the upside, trying to come into the 200-day moving average from below. It was during that whole bear market. But we were rallying pretty good. It was this right here, this run towards the 200. The Jackson Hole event where Powell talks was scheduled for 10 minutes. He came out in a mic drop moment and pretty much said, we're going to keep rates higher for longer. Suck it up, kids. We ain't cutting rates anytime soon, and sent the market on a tailspin that dropped us down into those October lows. His speech lasted, what, like 30 seconds, 45 seconds? So when he wants to, he can get the message out there. You know, most of the time he sounds like a buffoon, stumbling over his own words and repeating himself, and just, you know, typical Powell. But that day, boy, he was crystal clear. So who knows what he's going to do today? Just keep in mind that it was either on this one or it was this one. But one of these two was Powell at Jackson Hole. And either one, whichever one it was, it sent us all the way down to the lows before QRA. Actually, that wasn't the QRAs. It was here. Everybody, be careful. Be safe. Watch the clock. I'll see y'all tomorrow.